The chair of the Federal Reserve meant what she said. The central bank will move carefully and cautiously when determining when to raise interest rates. Janet Yellen cited a weak global economy and stubbornly low inflation. That slow pace of rate increases helped propel stocks. The Dow Jones Industrial Average gained 97 points to 17,633, its highest close of the year. The Nasdaq added 79 and the S&P 500 rose 17. But Ms. Yellen's tone remains in sharp contrast to some other Fed officials who, during the past week, were more upbeat on the economy and said the time is near to hike. Steve Liesman has more on the Fed chair's cautious signs.
The question is being raised, has the Federal Reserve quietly retreated from its rate-rising regime after launching what it dubbed, quote, rate normalization in December? Markets, from gold to fixed income to stocks, reacting with unanimity that Fed Chair Janet Yellen laid out a dovish outlook for rates at her much-anticipated speech at the Economic Club of New York today. She suggested, quote, greater gradualism is warranted in raising rates and emphasized the risk from global economic weakness to the U.S. economy.
In particular, developments abroad imply that meeting our objectives for employment and inflation will likely require a somewhat lower path for the federal funds rate than was anticipated in December. Given the risk to the outlook, I consider it appropriate for the committee to proceed cautiously in adjusting policy.
Fed observer Krishna Guha at Evercore ISI said, quote, the Fed chair is clearly in no hurry to undertake the next rate hike. And Dana Saporta at Credit Suisse said, curiously, for a central bank presumably in the middle of a tightening cycle, Yellen's speech focused more on downside risks than those to the upside. Remember that several Fed members had recently pointed to the possibility of an April or June rate hike if the economy continued to improve. Granted that it has decelerated recently, but Yellen offered little possibility of a rate hike next month or even made it unclear when the next rate hike would come. She also questioned the one obvious reason for hiking, rising core inflation. Yellen suggested she had her doubts that the pace of inflation gains would continue. Yellen's comments that the decline in interest rates offset recent weakness from abroad is another way of saying she is fine with where bond yields are priced right now. That's an implicit admission that Yellen agrees with what the market has priced in now for the Fed, which is to say not many rate hikes at all this year. For Nightly Business Report, I'm Steve Liesman.